Hi everyone, welcome back to the audit and attestation class. Hope you are enjoying the session. So this one is for the specific matter that requires special audit consideration. And in this session, we'll be covering in detail about inventory and inventory held by others or third party, and we'll do some practice question also. So let's dive into for more details.
Next topic is inventory count and inventory held by others. Have any of you attended any inventory count, or have you seen any inventory physical verification of inventory?
Yes, sir.
Do you mind sharing your experience?
Yes.
Sir, ideally, it's primarily an observation. So you go to, let's say, a plant, or I've even done it for an oil and gas client wherein you have to climb the tanks. And looking at my physical fitness, you know it's not easy. So, but usually you go there. It depends whether the internal auditor is there as well or not. But then you tell them you have a listing of your inventory stock items, and you would do the counting. So you do usually floor to sheet and sheet to floor. So you would, let's say, start with sheet to floor. You'll say, okay, where is this particular lot, and then they will count it for you. Then you'll note the numbers, and then you'll see whether it matches or not. And later on, you identify if there's a difference. You'll see why there's a difference, and you can see if there is an adjustment to be posted. Then you also tell them, okay, you would randomly pick something from the floor to make sure it ties back to your sheet as well. So you would say, okay, what lot is this? Can you check that? And then you'll see where that is in your sheet, and then accordingly you do your counting.
Yeah. And have any of you have experience in dealing with a client where inventory is lying with third party, maybe with job worker, or maybe with you can say warehouse owners?
Yes, sir. Actually,
Yes.
in my current client, that the stocks are stocks are sending to Amazon, and they are maintaining inventory at there, and they are dispatching the material on the basis of orders, Amazon orders, and then at the month end, I'm just valuing that how much quantity they have and just matching with my recording. So, and then at the end, I'm just reporting to the management that this is.
Yeah, absolutely right. Pranjali, Nimisha, Ayush, you guys have any such experience of inventory count or inventory lying with third party?
No, sir.
Gurme has anything you would like to add?
So not related to third party, but yeah, so I had that experience where inventory was there on the sheet, but it was indeed an obsolete inventory. So it was lying in their open area. There were cylinders used for molding, so used in making that beer. I went to International Brewery Limited, Darjeeling. So that there was a lot of cylinders which were there on their sheet. They were showing as their inventory, but it was indeed an obsolete one. And I investigated the reason. So that particular warehouse was following up with the accounting department to move them to the obsolete items, but there wasn't action from the accounting side. So there was a lack of communication among them. So that's why they were just publishing that as the inventory in the books. So I've come across such an observation, and I was there.
Yeah, good. No, thanks, Coach Gurmehar, for sharing your experience. So hope like you all guys got some understanding about like how this inventory count happen or how this inventory lying with third party. Let's understand more in detail through this notes. So inventory count and inventory held by others. So here, what all type of inventory we are talking about? First one, inventory. Just imagine like any production company, or you can say any manufacturing company, right? Any company you can imagine. It may be like a FMGC company, or it can be like Patanjali, or it can be like HUL, or it can be like car manufacturing company. Whatever comes in your mind, whatever best you can imagine, just imagine that company and imagine like what all kind of inventory they may have. Inventory they may have like raw material, right? And there might be something in production floor, which is work in progress. There might be some finished good, right? Which is like completed inventory, available and ready for sale, right? And then there might be some stores and spares parts as well, which is lying as an inventory. And then there might be inventory which is lying with the third party. It can be with the job worker to do some process for manufacturing, or it can be lying with the warehousing company, which is being ready to sell. So that can be like in the stage of raw material, that can be in a stage of WIP, or that can be in a stage of finished goods, right? At either stage depends on like what kind of business you are and what kind of inventory you have been given to the third party. So how do you test the existence and condition of the material inventory? First is you will be performing observation count procedure. So observation count procedure is like Kush has explained in detail, is the inventory count procedure. So as an auditor, as a CPA, we will not do 100% testing, but we'll do sample testing. 100% testing is being the responsibility of management. So management do the test of 100% inventory, and out of those we test certain sample, right? How do we test those certain sample? Some sample we test from the, you can say, inventory sheet to the floor, right? For example, let's say you have taken an inventory listing from the system, right? From that listing you have selected, let's say 20 sample, 25 sample, or 30 sample, and you go with the management and check whether those are existing in the floor or not, whether they are available with the management or not, right? And the other side, what you do, you select randomly sample which is lying on the floor. Are they also being allocated or available in the inventory record which you have taken in the books? So you do both way testing, from sheet to floor and floor to sheet, to ensure the completeness and existence of the inventory, right? Second thing, what you do when you perform the inventory count is inspecting the inventory condition, right? Whether the inventory is at appropriate condition or not, or if the inventory is not at appropriate condition, does it require any obsolescence loss or impairment loss, right? That also you need to evaluate when you are doing the inspection of that inventory. If count is performed, so inventory count is generally need to be performed at the year end, because it's a balance sheet item, and balance sheet item are generally as of date. But there might be a reason, there might be a you can say cases where it is difficult to perform the inventory count at the year end date, right? Maybe because of practical challenges, maybe because they cannot stop the production, or maybe like it's impracticable to do in one day, right? Or maybe it is not so efficient approach to perform the inventory count at year end. So in that case of scenario, there might be possibility that management perform the inventory count at alternative date, not at the year end date. If the count is performed at any date other than the financial statement date, what all things additionally you need to do? First is test the change in inventory between the count date and year end date. So I think in last class we discussed about roll forward procedure or rollback procedure, right? For example, if your year end is 31st December 2021, and the company has agreed to perform the inventory count on, let's say, 31st of October 2021, and they have invited you to observe the inventory count and perform the test of inventory count, and you have done all those observation and testing of the count on 31st October 2021, but you need to give the reporting on 31st December 2021. So how do you ensure what all procedure you need to perform to gain the comfort over the change in inventory balance from October 31st to December 31st? That means from 1st November to 31st December, what all addition has taken place, that may be purchases or transfer of inventory, right? And what all deletion has been made, that means transfer of inventory from raw material to WIP, WIP to FG, FG to sales, right? So in those 2 months period, whatever the transaction has been happened, for you, it is required to perform the test on those movement, whether it's your purchases or it may be your sales, to gain the comfort over the transition period, over the period between the inventory count date and the year end date. That is what is being mentioned in point number 3. If count is performed at a date other than financial statement date, test the change in inventory between the count date, that is 31st October, to the year end date, which is 31st of December, by performing roll forward procedure, right? And if you remember, in last to last class we discussed, if you are doing like first time audit, or you are a new auditor, but you have been appointed after the previous year financial statement has been signed, and how do you gain comfort over the opening inventory if the previous auditor has not performed the inventory count? In that case of scenario, let's say you have been appointed on 1st March 2022 to perform the audit of financial year ended December 21. So in that case of scenario, you'll be performing inventory count on, let's say, in March 2022, you have performed the inventory count. In that case, you'll be doing a rollback procedure. That is, from 1st March 2022 to 31st December 2021, what all purchases and the transfer has taken place, you'll be testing those transactions. That is called rollback testing. Make sense? Yes, no?
So rollback procedure is will be mainly involved in the case which you just stated.
Yes.
When we are performing initial audit, we have to have a comfort on opening balance sheet, right?
Yes.
But in regular audit, we will not come across such a scenario.
Yeah, it's more majorly roll forward.
Okay.
Practically, yes. Fourth point is, if unable to attain physical count or count at alternate date is acceptable with the procedure performed to the intervening period transaction. So if at year end date there might be any challenge to perform the physical count, it's okay to perform at alternate day, but you need to perform additional audit procedure for the intervening period. Fifth is, if attendance at inventory count is impracticable, let's say it's in war zone or it's in area where like hard for a human being to visit, right? Or maybe having hazardous component, right? So, and it's not practically possible to perform do the inventory count, and it is not possible to obtain sufficient and appropriate alternative evidence of the existence and condition. Then in that case of scenario, the auditor should consider modification in audit opinion. If you will not be in a position to gain the comfort over the existence and the valuation of inventory, then if the value of inventory is material to the financial statement, it's better to provide qualification or modification in the audit opinion. If it is not material, then you can ignore it. Sixth is inventory held with third party. So if inventory is held with third party, how do you gain the comfort over the existence and valuation of that inventory? You will be requesting the confirmation of quantity and condition of the inventory. Second, you can perform the inspection at the third party location. For example, you have a major job worker, right, to whom like company do all raw material outsourcing to do the first level of processing, and then after management intake for the subsequent WIP. In that case of scenario, you can perform the inventory count at the job worker location as well. Third is apply other appropriate audit procedure like cutoff procedure or roll forward procedure as CPA feel required to gain the comfort over the existence and valuation of the inventory lying with the third party. Make sense? Let's do a practical question. couple of practical questions here. First is a part of the client's inventory is in public warehouse, through which the following method evidence of existence of this merchandise can most effectively be acquired: calculation, inspection, observation, or inquiry. So the core of the question is you have inventory lying with the third party. Which procedure will give you more comfort, or which procedure is most effective?
So anyways, observation is the best procedure to have that comfort.
Yeah,
Not
right.
just on inventory, but overall observation is given the top priority.
Plus, the inventory is in public warehouses, so we don't need to, go and inquire from them or take a confirmation from them. We can directly go and observe ourselves. It's a public warehouse because I think observation should be there.
Yeah, Gurmehar, Rahul, Pranjali, what's your thought? Are you guys with me?
Yes, sir.
Kashish, Vineet? Yeah, what's your view on the first question? Are you all agree to observation is the right answer?
Yes, sir.
Okay. Look at the next question, question 2. For a financial statement audit, what is the prime assertion that is at risk related to inventory on consignment? So which is like main assertion for which the risk related to the inventory on consignment? So if you have given inventory on consignment, which assertion is being you'll be testing?
Sir, the first one, second one, third one would be all in case when we have inventory which is with us and we have not consigned it to, it's not been sent on consignment basis. Because it's been sent on consignment basis, we have to check whether actually what we are showing in our books, we are, the rights and obligations which are attached to that inventory are there or not, and we need to confirm that assertion first. So I think fourth should be the right answer in this case.
Right. Rahul, Gurmehar, Kush, what's your thought? Nimisha, Vineet?
Yes, sir. When it's consignment, then it's about rights, whether the company owns the right and has the right to show it as inventory balance in their account. So that's the rights and obligation is the right option.
Cool. So this is about inventory count and inventory held by others. So next topic is litigation, claims, and assessment. These all are small topics. Do you want to take a break or you're good?
Break.
Break, good one.